Hello traders and investors, welcome back to the Trend Trader channel. We know it has been a busy week. A lot of earnings came in the US markets. So we were watching the market because we had interest in some of the stocks that reported. Largely it was tech companies that came with the earnings, but there were also other big corporations like Coca-Cola that came up with the earnings. So in this video, we're going to be looking at the summary of the financial result of these companies. And then in the end, we look at the chart of these companies so that those people that have interest in technical analysis can watch the video at the end to see the technical setups. And then finally, we will look at the upcoming earnings and what to expect in the coming week, which companies we're going to be interested in. So like I said, it was just a lot of earnings. But before we start, I would like to ask those who haven't subscribed to please consider subscribing. And if you found value in this video, please make sure that you smash the like button. So we're just going to start by looking at Amazon. This is one company that at one time it was exciting and then it was disappointing. We have a position on Amazon. The reason I'm saying that it was exciting and then it was disappointing, as you can see, the company came with beautiful numbers there. They have a 3.2 billion net profit, which is about a 6% increase when you compare it year on year. So the stock, it just jumped about 15%. The result came after market close. So it was good. We were expecting that the market the following day was going to open up. But during the conference, the CFO was asked about the Amazon Web Services, and then the answer that he gave there was not that exciting. So on the very same day, the stock gave back all those gains, and then it closed on the following day when it opened weaker and it failed to trade higher. But that was just the price action of Amazon following the earnings. Otherwise, when you look at the business itself, we can see that it's 127 billion revenue generating business. We can see the money is coming from different things, from Amazon online Prime subscription, Amazon Web Service. This is a big thing these days as more and more people are trying to do cloud computing. And also we see that there's this net profit. We can see how the money is spent on other things in terms of technology, fulfillment and all those kinds of things. But the most important thing is that we know it's 127 billion generating business that has a net profit of about 3.2 billion. So the business is making money. As shareholders of this company, then we can expect to receive those nice dividends that people like a lot. Then moving forward, looking at Alphabet, this is also another exciting company in terms of price action. The stock performed very well. It was really exciting. You can see the company generated just shy of 70 billion there, but it's a 3% year-on-year growth. Most of that money, it came from Google search advertising. It is worth noting that YouTube generated about 6.7 billion. And then there are other Google services that brought in some money with a net profit of 15.1 billion. That's really a good money, considering that Amazon bought twice as much this money, but it just generated a fraction of this net profit. So it is important that whenever you look at companies, you look at many different aspects, because sometimes we're not just comparing apples and apples. But it's nice to see that this 15.1 billion that is reported in this quarter represent about 32% in terms of margin, and it is a slight increase year on year. So these are interesting results. We have a position here. It is really an exciting. It's exciting to have a position in this company. You can see the money is just too much money that the business is generating there. And also they spoke about a stock buyback. So the benefit of a stock buyback is that whenever a company buy its shares from the market and they cancel them, the value of the shares that are still in circulation, it goes up. So the way that investors make money from the market, it could be from dividends, capital appreciation, but also the value of the shares, it increases when the company buy back the shares and then they cancel them. And the 70 billion share buyback is just a big thing, because considering that it is about the amount of revenue that the business is generated, so the shareholders should smile ear to ear. Okay, so that's it with regards to Alphabet. And then let us move to Meta. We know there was a time where we were bearish on Meta, but since the beginning of 2023, we have been bullish. We've been sharing Meta platform charts on our social media accounts, and we've also been posting charts on Twitter. We've covered Meta platforms in some of the videos that we have released in our YouTube channel. So one thing that is worth noting with Meta is that Mark Zuckerberg mentioned that the business is trying to move away from metaverse, and then now they want to focus a bit more in artificial intelligence. We can already see companies such as Amazon and Microsoft, they do generate a lot of money from artificial intelligence. There's nothing wrong with meta platforms. I believe that is something, about metaverse, I believe that is something that is still going to continue from meta platforms. It's just that it's not going to receive a lot of attention as it did, but also we are aware that it did not generate a lot of money in the past. Sometimes it's good for a business to cut its losses. So now we just see that it's about a 30 billion revenue that was generated coming from advertising. You can see advertising, it's a big thing. So this family of app, it includes advertising and this other, which in terms of other, it's the payment infrastructure. Then you look at the Reality Labs, it brought just about 300 million. And it's not just 300 million, you can see that it is down 51% year on year. So in terms of MetaQuest, this business segment or this business unit was not profitable. Anyway, at the end, the company ended up with a net profit of 5.7 billion, which represent a 20% margin. So yes, margin, it is a big thing, because it tells you how much profit to generate from your revenue. So a 20% margin, it is decent. If it was less than 20%, it would be worrying, because it will mean that the company is not in control of the cost of doing business. So 20% margin is not a bad figure. We can see that Meta Platforms is planning or it has already spent 9.4 billion in terms of research and development. As a tech company, it does need to spend some money in terms of research and development. Nonetheless, these were great results. They were well received by the market. We saw Meta Platforms jumping. I think it jumped about 15% or so after, because the result they came after hours. The stock just jumped 15%. The following day, it kept up. So we were happy we have this position in our portfolio. So we were happy with that price action. Okay, so now let us move to another stock. We are looking at Microsoft. We've already mentioned that Microsoft, it made some money in terms of artificial intelligence. You can see here this intelligent cloud brought in about 22 billion, increase of 16% year on year, and then the total revenue, it's 53 billion there. There are other Microsoft apps that brought in about 17 billion. But the focal point is on artificial intelligence, because we saw that with a lot of these tech companies, this is where things are shifting towards. And then we look at the net profit. It is a 35% profit margin there of about 18.3 billion. That is a really good amount of money. Also, Microsoft, it just jumped up when these results came in. At this moment, we couldn't even find a spot of buying this position, but we're hoping that in the near future there will be a bit of a consolidation, and then we can find a decent entry level. Look at the earnings, it's about $2.45, and then the Microsoft Azure was increased the revenue by 27% year on year. Again, impressive result. We are happy with these results, even though we don't have a position. And then now looking at some companies that are not necessarily, well, Mastercard is in tech. Why we including Mastercard in this is because what I wanted to show earlier on, we spoke about the margins. You can see that Mastercard generated 2.4 billion profit, but when you look at the margin, it's 41%. Mastercard does not have a monopoly in the card business. There's still a Visa. Visa is also generating a lot of money, but this just shows how much power the business has in terms of controlling its expenses whilst bringing in a lot of money. So it is an exciting thing. We don't have a position on either Mastercard or Visa, but for those people that are interested in this company, our opinion is that based on these profit margins that the business is generating, we can see that it is a company that is doing very well, considering that the net revenue is about 5.8 billion. And you see the net profit, it's 2.4 billion, which is 41%. These are really good figures. Yes, the operating expense is still 2.6 billion, but in terms of profit margin, the company is just doing great. So for those that are interested in this company, they can dig deeper, but we believe that it is a company that is worth investing in. But yes, obviously you still need to do your own research so that you make an informed decision. And finally, we are looking at Coca-Cola. We know Coca-Cola is a giant. They operate, they've been in business for so many years. But you look at that revenue, they generated about 11 billion. But remember, the results are for the first quarter of financial year 2023. So they brought in 11 billion, and then they ended up with a net profit of 2.1 billion, representing a 28% margin. What is worth noting with Coca-Cola is that it's traded higher this week, so the share price itself is also increasing as the business increases. We know people, long-term investors, buy and holders, they like these kinds of companies that consistently generate good revenues, high net profit. They pay consistent dividends. So yes, it's good to see that a company that pays a dividend regular, it's still able to generate a net profit, because just because the company has paid dividend for the past 100 years does not mean that it cannot stop paying dividend. But what we see here, we see that it is a nice revenue. One thing that was interesting on these results is that we see that this company, they said they want to leverage on chat GP and DLE, so for customer service, ordering and point of sale things. So basically they want to have the slice of that artificial intelligence. You see, they say they have an AI strategy there, so we will see how this is gonna pan out in the future. But other than that, it was a good set of results. I mentioned that we're gonna look at the chart, so for the people that are not technically inclined, well, you can still stay so that you can see what I'm gonna be talking about in terms of chart. And then for the upcoming week, we see that these are the most anticipated earnings. Not all the earnings that will be coming, but some of the more exciting earnings that are gonna come in the next week. We see companies such as Sophie. We know there are people that are really interested in this company, so we want to see how it's going to perform. There is Uber, but in my opinion, there's not so much we can say about Uber these days. It's a business, it exists, but there's really nothing exciting. There's AMD. We saw other semiconductors, they came with some good result. We see Intel this week, it came with result. It was a big loss per quarter. The stock got hammered a bit, but it managed to pull back. So despite the negative news, the price action was positive for Intel. So that is something that brings a bit of confidence in terms of the semiconductor sector. Nvidia is still leading. We have a position on Nvidia. We also have a position on AMD. Our Taiwan semiconductor position turned sour. Fortunately, we managed to break even, so we did not lose money in that position. There's Pfizer. We want to see all that drug money, if it's still going to come in. Ford, not so much is happening in that company. We're not expecting big things. There's Starbucks. People, they love Starbucks. They do invest in this stock for dividend. And then we can see there is a CVS Health, one of the companies that pays dividend, Qualcomm, another semiconductor company. We will be interested to see how does AMD and Qualcomm perform in the next coming week. Mercado Libre, it's a stock that has performed well in the past in terms of capital appreciation. It will be interesting to see how it performs. We know that WWE is in the process of being bought out. We saw that Vince had accepted, I think it's about $1 billion offer to buy WWE. So we're going to see what they are going to talk about today. And then there's Datadog. The stock is indeed behaving like a dog. It has been moving downwards. Nothing much was happening there. AP InBev, we saw if you are in South Africa, they will be paying a dividend in May. So we'll see what the US AP InBev is going to report. But in South Africa, AP InBev has done well for the investors. Unfortunately, SAP Zenzelekabili did not do so well like AP InBev. And then we have Moderna. Previously, we had a video, we were talking about Moderna and Merck. They were talking about a cancer drug. So the stock performed well during COVID when they came out with that mRNA vaccine, but since then the stock has fizzled as COVID-19 was no longer a big burden as we thought it was going to be initially. So yeah, it will be interesting to see what kind of numbers Moderna comes with. Peloton has performed poorly in the past. Novo Nordisk is still doing okay. Those big pharma companies that have been here for a while, not just some COVID companies, we do expect them to perform a bit better than companies such as Moderna. And then what else? Apple. Yes, Apple is an important company. We have a position in there. We are indeed looking forward to that price action of Apple. We are long. The position is in nice profit. We have a profit cushion, but when it comes to earnings, we will then start to raise those stop. But in the past, Apple has been that company that has been able to generate revenue and ended up with a decent net profit, but past performance is not an indication of a future performance. So it is important for us to prioritize risk management. Otherwise, we are expecting some decent result from Apple. Shopify, Blog, Coinbase, those are some of the companies that performed well in 2020, but they have been struggling for a while. We have a position in DraftKings. We will share a chart of DraftKings so that you can see why we love this stock, but we do have a position. Carvana has performed poorly. We're not expecting anything to come from this because the company is just struggling to keep the lights on. And then we have AMC, the so-called meme stocks. We will see how these are going to perform next week. So I think in the spirit of fairness, we just not do the technical analysis in this video. This video is already long, but you can subscribe because the next video then is going to be the technical analysis of these companies. We don't want to keep you here much longer, so it's better if we give you the information bit by bit. So for all the stocks that we have covered, Alphabet, Meta Platforms, Visa, Mastercard, Coca-Cola, AMD, Apple, we're gonna have a separate video that we're gonna do the technical analysis on. So we will see you in that video. We're gonna end this video here so that it does not become too long of a video.